This video is designed to kind of help you get through the Chapter 1 Learning Target 2 Show What You Knows. I'm going to walk you through these. I'm not going to give you the answers, but I will walk you through these. So for the first three that we do have here, first four rather that we do have here, we need to go back. Before we can do this, we need to understand what the accounting equation is. And the accounting equation is assets equals liabilities plus owner's equity. So in this case, for our first example here, our assets, which I'm going to put in green, are $3 million. So therefore, I'm going to take that, my $3 million, equals my liabilities, which is yellow, which is 1.2, and I'm going to try to have to get this number. So to do simple math, to be able to figure this out, it's going to be 3 minus 1.2 will get me my owner's equity. So here we continue on. If we go down further, again using the same thing, we don't have, they're asking for the total assets in this one, but we do know our liabilities. Oops, wrong one. We do know our liabilities and we do know our owner's equity in that case. So, and again, if we're going here, we're going to go assets equals liabilities plus owner's equity. If we're trying to find that, we're going to take our liability plus our owner's equity, and that's going to give us this number. Continuing on, again, remember assets equals liability plus owner's equity. Here we have our $5 million in assets. We also have then our 3.2 in liabilities. That'll allow us to find that. Moving on to the next one, if you look at here, this is a little bit tricky one. I think before we get into this one, though, we need to understand two things. How do we get to income? Well, revenue minus expenses equals income, okay? So revenue is basically money coming into the business in the form of sales, performing sales and services. Expenses is money coming out of the business in terms of things needed to operate the business. So the other thing that we need to kind of get into here is we need to get into the difference between accrual and cash-based accounting. Accrual, we record transactions when the sale happens. In cash-based accounting, we record transactions when the cash is received. In this example, they're asking us to use the accrual-based accounting. So there actually is some extra information in here, so such as when the cash was received and when it was actually paid. This is actually a pretty simple equation, because what we're going to do is we're going to take our revenue, we're going to subtract from our expenses, and that's going to allow us to get our net income for this example because we're using the accrual. So now let's take a look at the next questions, and they're asking us here to define them as assets or liabilities. So if you think about what an asset is anything that we own, that we can use and we can turn to cash, or is owed to us, okay? And a liability is something we owe others. So if we take a look at this and kind of go through here, again, a liability is what we owe others. An asset is what we own. So in the first one, we owe someone, our suppliers $50,000. Next one, someone owes us money, so we're there. Next one, that cash in the account, that is we own that one, so that's owned there. The next one, someone owes, we owe the bank on the next one. Next one is we own that building, so therefore that it would be an asset. The next one would be we owe our employees money, so that would be a liability. And then finally, we own this patent that we owe there. So if we continue on down here, it's asking for revenue and expenses. Revenue is another word for sales, and if you want to even simplify it, it's also money coming into the business for performing services. Sales are, expenses is money coming out of the business that's related to operating the business. So if you think about that for a second here, money coming in versus money coming out. So if we talk about we provided $4,500 in services to a client, well, that's going to be money coming into the business. If we talk about we provide $1,500 in services, who pays cash, that's money coming into the business. We received a bill, that's going to be money coming out. We paid cash, that's money coming out to operate it. That's money used to operate the business. Employees have worked and earned and we pay them, that's money coming out. And then this one is money coming into the business. So for the final one, we're going to be able to do all of this. We have to go back to our equation again. So assets equals liabilities plus owner's equity. Okay, just to to clarify this stuff. So we got our assets equals our liabilities plus our owner's equity in this situation here. So in this situation, we need to be able to go identify our assets. So our assets in this situation is actually the final four. It would be someone owes us money. We have a building, we have cash, and we have raw materials. Those are all things that we own, and those are our assets. For the next one, we have to figure out our liabilities, and our liabilities in this case are going to be here. So if we know this situation, and obviously they're going to be asking us looking ahead, they're going to be asking us for the owner's equity part of it. We know how to get to that part. So obviously as I come down here, this one should be pretty self-explanatory on how to do it. And if you go down here for your total liabilities, this one should also be self-explanatory if you're following along with my color coding. Now, and then the owner's equity part of it should be also pretty easy as well, and that should be right there. So, hope this helps. See you soon.